Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, February 19th, 2010. Well, folks, what a day, really stretching all the way back to right after the close yesterday as the Federal Reserve came out and hiked the discount rate a quarter basis point. Unbelievable move here, which shocked the market yesterday after the bell. Now, the key was initially the futures got slaughtered. We saw the futures trading down on the S&P as much as 12 plus points yesterday after hours. The SPY was down below 110, and if you look at the chart today, you can clearly see that that's not what's went on in this market. In fact, the markets have moved up a majority of the day, are now just starting to pull back as they are just above the flat line. Now, again, as I said yesterday, once they hiked that discount rate, folks, that was the key. You started to see selling across the board, massive dumping going on, but that did not last. Now, the Fed was extremely intelligent in this decision. And you might say, well, why is that? They hiked the discount rate. Why is that intelligent? It's not the discount rate per se, it's how they did it. All right, folks, the Federal Reserve, again, I've talked about the administration being very intelligent. So is this Federal Reserve, Treasury, you name it. Unbelievably smart on how they do things. When they did this move, folks, it was right after the close where you have the max amount of time between the close of the market yesterday and the open this morning. That gives the most amount of time for the market to kind of adjust to life post-discount rate hike. All right, and we all know that the markets are first emotional. We all know psychology rules the market. So in theory, you want to make sure you're doing that. You want to give as much time for the news to settle in as you can, and that's exactly what they did. So they came out with that rate hike here, discount rate jumping a quarter basis point, and they basically gave the max amount of time for the markets to kind of absorb it and kind of get used to the fact. And by this morning, that's exactly what they did. Throw in a few positive Federal Reserve members' statements, through a few positive key statements saying, oh no, this is just kind of a precautionary measure, no big deal from a few other players. And before you know it, the market was basically flat to just slightly lower on the open. And that's exactly where we started. So again, folks, right now the markets are essentially flat as well. You have the Dow up 5 points, and NASDAQ is up 2, S&P 500 up 2 as well. And you can see very, very much so the markets have absorbed this rate hike and really with no detrimental effects. I mean, as you look across the board, folks, I mean, there's nothing negative about it, to be honest. You can see clearly that the markets are just hovering here. In fact, they're getting a little bit of a bounce off of this little, just above this little bit of a level here, 111.10 level, really getting a small bounce back up. All right, now, a couple other things to go over. This morning we got some CPI data, and that was also a very, very smart thing. All right, very, very smart thing about the CPI numbers. Yesterday we had the PPI numbers. Those were extremely hot numbers, so that showed a lot of inflation at the producer price level. However, the Federal Reserve knew before today that the CPI level, the CPI numbers, consumer inflationary pressures, consumer price index, which is inflation at the consumer level, we're going to be basically flat to negative, showing that there is no inflation at the consumer level yet. So sure enough, folks, they come out yesterday, right after the bell, give that analysis, give the jump in the discount rate, and then they know that today people are going to see that and say, oh, okay, it's not like they're going to have to continue to raise rates because there's no inflationary pressures at the consumer level. That's exactly what went on there. And you have to say, folks, do I agree with it? Do I not agree with it? I don't really care. I'm a trader. I'm going to make money any which way. But bottom line is you have to respect the intelligence and understanding of the Federal Reserve. The Federal Reserve absolutely understands the markets and how to manipulate slash give news to the markets that is going to be absorbed in the right manner. How to do it precisely, and they did everything right here. There's no other way to say it, folks. Ultimately, the markets are essentially flat to positive, and that's after a discount rate hike. The dollar initially jumped in a major way yesterday, but did come down dramatically throughout the day, and that's really what's helped the market stay afloat today when the dollar started to fade. Look at this move on the dollar, folks. Is that amazing or what? This is the initial move. This is the only down move in the market from where we started today occurred when the dollar moved up here. Look at this on the SPY. See the first down move right here? That's your down move there. That's as the dollar's going up. Since then, the dollar's really fallen, and until you kind of topped out right here at the 111.50 level, then the markets have just faded just gently here, very, very gently at this point. But you can see it's really an amazing, amazing event here, and you have to congratulate them on a smart maneuvering, kind of it's like a chess game with the markets, and the Fed easily checkmated there, right there, all right? So again, folks, let me touch on the 60-minute chart. You can see the 60-minute, I have a master level here at 111.50. Master level at 111.50 on the 60-minute chart. That got tagged today. Look at that perfect tagging of that level, and sure enough, the market is starting to pull back a little bit off of it. Now, this week has basically been positive. Assuming we end positive today, which we may not, we could dip, but ultimately it's looking like a flat day. Today was options exit as well, which is another interesting analysis story that we should do at some point. But assuming everything stays as it is, you have to look at this market and say, all right, well, this week was up again. Now, 2 weeks ago, I said that. I said 2 choppy weeks to up. That's exactly what we got, especially with yesterday's crazy after-hours action. Choppy was definitely the name of the game. Now, the question is, going into the third week next week, do we start to fall again? How do we maneuver now going into the third week? Is it going to be a choppy week? We do have a pivot point coming up, a master pivot point that we need to alert all our premium members to. We've given that out to them already in the chat room and in the research center. We will continue to alert them. In addition, there's a webinar this Sunday where we're going to go over how to calculate pivot points, how to do, count systems and all this kind of stuff that we use to give ourselves the best possibility of making money in this market, which continues to be exemplary. All right, so continue to monitor this, folks. And again, right now the market's as overall getting a small little bounce here off of a little bit of a fade. But overall, you have to be impressed with the markets. Look at this trend line. See this blue trend line underneath? I called this out today in the chat room. As it hit, I said, guys, there's going to be some support here. And you want to see where that was that it hit? Take a look. Look at where this came from. All the way back on the 12th. When we were down at 106 and change, you connect these lows. And if you just draw that line and connect it all the way through here, look at that. It comes all the way back and focuses right under the lows of today. So you can see how you have to keep your trend lines on your charts, and they will make you money. No doubt about it, folks. Absolutely astounding. All right? So that's what we're sitting here again, guys. I will be releasing some key data in tonight's nightly analysis video, which, again, are 40 minutes in length. They're going to be huge videos here coming into next week because we are coming into a key pivot. You have to be aware of this stuff, folks, as it is going to literally change the way you look at the markets and make profits for all. Take care, folks. I'll talk to you this weekend in the Weekend Technical Analysis video. Take care.